You're recording this video, it's Thursday 31st of October 2013. It's Halloween. Hope you had a good couple of days trading. We had FOMC yesterday and that was always fun. Lots of volatility and shenanigans going on, and because I'm in the European time zone at the moment, I was able to trade it. Normally when I'm in Australia, it happens like at 3 or 4 in the morning. I'm just not up, so it's always kind of fun to see that. And then today we have the day after and everything becomes a little bit clearer, so I'll show you that on the higher time frame charts. Monday, Tuesday I didn't trade. My sister's in town, so took the days off. I watched it for about an hour on each day, but you know, when your head is not in the game, it's not worth trading. I've learned that the hard way. Anyway, so we've only got 0.9 million contracts traded done so far, but you know, it's only midday here. So yesterday we had a decent about 1.6 million. The last few days before then was just, I mean, paltry, maybe a million contracts each day. So hopefully today we'll kind of get a little bit higher, 1.2 or so, 1.4. And what we've got at the moment is this, you know, amateur up bar Rambo pattern, kind of low volume melt up type activity. You can see Rambo patterns, amateur up bar Rambo patterns. We've had our exhaustion buying and a bearish divergence has come in, but for me, we've not seen any blue professional bars. And you know, tops, I like to see blue professional bars at tops. You can get kind of no demand type activity where the professionals aren't necessarily there, but they'll pick it up on the lows definitely, and they did pick it up into this little sequence here. Bullish divergence, blue professional bars, bang, gapped and go on the way up. So it's one of these kind of melt up scenarios, and this thing's been going since, you know, November of last year. That's when we had the break into the trend move, the pullback to dirty end of trend, and we're going through this cyclical activity after that end of trend. So it gets a little bit overbought, it kind of gets a little bit oversold, and it kind of keeps going. I don't know whether this is going to be a long-term kind of melt up type activity. I know the commitment of traders, you know, stock market crash warning indicator has been gone off for a while, but we haven't had commitment of traders for 3 or 4 weeks, which has been a really unfortunate. Anyway, long term, or at least, you know, long-term tip bar charts, now we can see the activity after the FOMC day. So I'm going to show you a few things to kind of note on this. So first of all, going down to the 40,500 tip bar chart. So this is yesterday's activity where the FOMC kind of came out, had a huge amount of volatility, and then we came back down to the low 50s. This breakout level was 1750. And it acted as support twice overnight, and then today it was the low, or just above it was the low. So this move now has found a left shoulder. We've gone to a pullback level and we're heading back up. So that's the pullback to end of trend move that we're making on the 40,500 tip bar chart, and 1750 is a key kind of level at this point. In terms of, you know, the exhaustion patterns on the way up here, it's definitely getting weaker and weaker, and you can see the flush patterns on the way up here, having had exhaustion patterns, maybe setting this one going. But you know, at the moment we've not had another exhaustion pattern, and that kind of goes along with those Rambos and amateur up bar type activity. It's really weak going up, but no one wants to sell it. Go down one to the 13,500 tip bar chart, and again, today's support. Yesterday this was the break through this 1760 level was absolutely key, and we kind of broke down, tested back up, and then we had a pullback to dirty end of trend on 13,500. And what's interesting for me on this chart is we come back up to that 1760 level here, and a whole bunch of blue professional bars coming in intraday. Intraday professional bars are important, particularly on the 40,500 and 13,500 tip bar chart. You'll often see them at the beginning and ends of days, but when they're actually happening kind of midday, they're really significant. So, you know, we didn't have any during yesterday's activity here. They only had blue professional bars came at the end of the day, and that's professionals closing out positions. You know, that's kind of normal activity, but for this to be happening at midday, that's really significant. So, and it's also happening at the 1760 level, so I'm kind of conscious of that. And we've also had on this time frame an exhaustion pattern, a bearish divergence. We've come back in here, but we've not, you know, kind of made it to the other side and gone with another exhaustion pattern on the downside. So that 1760 is ending up being a really critical level. What we do there is kind of key. The next thing to point out is the 4,500 tip bar chart. So again, going one time frame down. This is, you know, similar setup. to my 500, 1500, 4500 tip bar chart. This is just the next sequence up, 4,500, 13,500 and 40,500. This is almost equivalent to a 45-minute chart. So here what I want to show you is yesterday's activity, and this was the break point here on this time frame. We started kind of moving down. This was the announcement, or as soon as the paperwork kind of got released, they kind of electronically parse it and trying to figure out whether it's bearish or bullish. And I think it was like 8 points top to bottom here that was done in matter of a minute and a half or something. It just wings around. I don't know how you could possibly trade this activity without decent stops. I keep my stops at 4 points away from entry, and I find that a nice kind of compromise. It's big enough to stay out of trouble even on days like this, and if I get it wrong, it's not too onerous in terms of losses that you take. But if you're trading this kind of activity with anything less than 4 points as stops, I just think that's crazy, and a lot of people don't trade it. They don't bother. But anyway, so we had a bit of a Rambo pattern. We tested back up into those the high of that kind of volatility there, and then we fell off a cliff and fell back down into this 1750s, low 1750s. But what was interesting was along the way, at all of these low points here, where the professionals could have been picking it up and saying, no, that's good value, I'm going to step in here, they did not. There's no blue professional bars, none here, none here. At the end of the day, they came in at the 1760 level kind of here. They weren't kind of buying a breakout there, they were just kind of closing out positions. That was an exhaustion pattern with a Rambo pattern. That's kind of unstable. That's too many amateurs kind of going the other way, thinking this thing's going to keep on going, and we kind of bounce from there. So that's not too unusual. But today's activity, note, there's the blue professional bars coming at the lows, and we get another exhaustion pattern during the full liquidity of the day. So I always say I like that. That's showing me that if this was real, kind of down here, the professionals would still want to take it down again that next day, unless we have a raging bull market overnight and this thing breaks into an uptrend and all the markets around the world kind of see that as an important low and the thing just takes off. Otherwise, we're probably going to go down and test that level, and so we got another exhaustion pattern here, and there the blue professional bars kind of coming at those lows at 1750, which is that magic number for the pullback on this time frame here. There we go. It was the breakout level. It became the pullback support level there. So this was not over until we'd seen those blue professional bars kind of come in. We did not see them yesterday. So my first trade today, when you go down to the 1500 tip bar chart, my first trade today was short 56.25, because I'm thinking, look, we have blue professional bars kind of spiking up here. Let's a break of this support level on 1500 potentially take us into a downtrend. That's what I was hunting for, this exhaustion pattern. Wanted to see that during the open of today's activity, so I went short kind of straight away. There wasn't enough confirmation really, I suppose, and then they kind of pushed it up to 62s, got everybody kind of in a frenzy. There weren't blue professional bars up at the top here. We had this amateur up bar. That was the only clue that this was weak. That was amateurs trying to buy a little bit of a dip, and the lows of that got broken, bang. And then so I was out of my short trade with a 2-point loss, so I've got to get that back. Then I'm going short at 58.75. I tried to go long at 59.25, got out with a 1/4 point loss. It started to break to the upside, but it got nowhere near my target up at 64.25. So just had to dump that with a 1/4 point loss, and then get short at 58.5, which was kind of around here as we started to break down. And then as soon as this blue professional bar, we were breaking to new lows and so on, this thing gathered steam on the way down, which is really nice. Did move my target out, was trying to squeeze out. I was trying to squeeze out 6 on the way down, which eventually would have got hit, but me, I pulled it in way too early, just got 4.5 out of this move, and I should have got more. I should have got back my 2 points that I'd lost on that first trade going short here. Should have picked it up on this trade. but I only picked up 4.5 on the way down there. So then I'm in this situation where, I'm up a couple, need to get my 4 because I like to have my 4. There's a decent amount of volatility and so on, and seemingly we've got enough kind of for a bottom to start thinking about kind of going long. So here we go. We've got exhaustion selling on the left hand side, and first bullish divergence kind of comes in here. We have amateur down bars, amateur down bars, amateur down bars. This level at 52 is holding, and so start thinking, right, this is going to break to the upside and it's going to surprise everybody. They'll have to get on board. As soon as saw this blue professional bar heading up, thinking, yep, that's good, that's jumping the creek through a previous high. Maybe there's another one, little one kind of comes in there. Maybe that's a gathering. Maybe we're getting ready to jump up here. No, and the thing just goes whack. And so I lost 3.25 on this kind of going down, getting out at the went towards a half point of my stop, and I exited almost at the low. I think it was the low that I got out at. Because I didn't want my stop to be hit, so I got out at 3.25 loss on that trade. And then all of a sudden you're like, you've done all this hard work, you've got the direction right, but it didn't work out in the first trade. You got it right on the second trade, and just wasn't patient enough to sit through having a stretch target kind of being taken out. And then you make a mistake because the trend direction was, I was right in terms of it being reversing into a long trend trade, but this was shaking everybody out. Breaks to new lows, blue professional bars coming at the lows here, bang, they hit it really hard, exhausted, all the sellers have sold at this point, and we break into an uptrend. So then the move is to get on board, go long, took 2 long trades, long at 52, out for 2 for the first one, long at 54.75, out for 3 on the second. So I'm good at the end of the day, but I've ended up doing 7 trades. Broadly speaking, I've got the direction right, the timing was a little bit off, and the market, the market always, I always jump in too early. I'm too early in terms of a reversal here. I know bottoms tend to be made quicker than tops, but always be ready for these kind of surprise moves where they need to shake everybody out. They need to get everybody out, thinking the thing's going to break to new lows, continue down, and I bet old CNBC guys were saying, "Oh my God, it's a sea of red," and blah 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 blah. And of course, no, that's it. They're shaking everybody out. Everybody who is short around here needs to reverse and get long, and things breaking up. So where are we going from here? Not sure. This is kind of exhaustion buying. This could be a left shoulder. It could be kind of getting this move going. We've got pullback to end of trend. Amateur up bars here. A bit of a rush for the doors here in terms of selling that move. Anxious to kind of sell down. It's going to come back to break to new highs. Not sure. Let's wait and see to the end of the day what it's doing. 4,500 tip bar chart. We're above resistance here. So this has got to go pull back to end of trend. So we're still going to have a little bit more strength. And let's see where these blue professional bars, these ones, see what that ends up doing on the 13,500. Is that a gathering pattern from which we put in a little bit of cyclical resistance, then we break into another uptrend above that, or is that the level that people really want to kind of leave this thing go? And I don't think so. I don't think we've seen enough blue professional bars kind of taking profits to the highs. That could just be a gathering. 1760, it was the breakdown level here, getting ready for them to kind of take it on and move it to new highs. These days I'm wary of calling a reversal in the market. It's almost like there are no other games in town. Everybody's rushing into equities. So I'm going to be very, very leery about saying that the top is in or anything like that. Hopefully, if you catch me saying that, unless there's real a lot of confirmation and a whole bunch of things kind of going on, stop me. Anyway, we'll know when it's in. We'll know when it's in. So there's no need to kind of rush and trying to preempt it. Okay, so 12:31 p.m. Hope your trading went well today. I'll try and get this video out ASAP.